In history, gold has been used as a store of value in almost all the major civilizations in the world. In 1694, the Bank of England was born and set about creating the rules for banking as we know them today. In 2009, Satoshi Nakamoto invented Bitcoin. And here is why you should care. Fact: from the moment you or your employer deposits money in your bank, the bank becomes the legal owner of your money. And yes, they can spend that money as they wish. If that is not enough of a privilege, banks create new money every time you borrow it from them, leaving the world crippled with debt in order to grow, with money that they never had. So in order to grow our economy, banks, governments, and regulators need you to go into debt. Because of the systemic risk this has on all of us, banks are protected from disruption and competition by regulators and governments, using the tax that you pay. What happens when this risk turns into the next financial crisis? Many investors have been investing in gold in case their bank exercises their legal right to your deposits during the next financial crisis like they already did in Cyprus. Holding some of your wealth in gold could be a wise move, but it's not exactly easy to chip off a slice of gold from your bar when you need to buy a loaf of bread. That's why others have been looking at Bitcoin. Bitcoin is legally yours and exists without a bank. It's spent in a person-to-person fashion online without a bank in the middle. Just as gold miners dig for gold, Bitcoin miners are rewarded with new Bitcoins when they confirm transactions. The supply is regulated by mathematical formulae that never change, which increases at a small pace compared to national currencies. Because of these properties, Bitcoin encourages you to save, as it has a fixed supply and is designed to increase in value over the long term. So what would you do if your bank took their legal right to your deposits? If you have most of your wealth in bank deposits or products that depend on bank deposits, like stocks, bonds, and property, are you really prepared for the next global financial crisis?